Hey guys, moving on to the next pattern. We're going to be doing the falling wedge this time. This is a bullish continuation pattern usually, however it can come from a bearish impulsive move first. We'll quickly just go over it and identify one or two of them so you can see what they can look like, and to show you a trick to identifying these a bit quicker if you're having a bit of a hard time as well. So we'll get stuck into it. There's one in the middle of our screen right now. I'll draw it in. So it's not the entire piece here. It's actually just from this wick, right, down. Right. You could go from body to body if you liked as well. We're just going for confluence, right? Because we can see here, body to body, we do get rejection and consolidation before the breakout here. So we also get the body close and reopen here. Okay, and there's no retest of this particular line or this line. So either of those would be valid in this case. I personally would probably go for the candle body ones, as that is a bit more confluential when it comes to the flag that happened underneath it here. And just cleaner, which I'll get to shortly about the cleanliness. The next is the wicks through here, right? You can go from wick to wick to wick, and then you've got this here, which is a bit of a liquidity grab in that sense, and then the same appears here with the body to body, right? Which then gets this liquidity grab here. So they're both relevant somewhat, so you get to somewhat be a bit of an artist when it comes to this, make a intelligent decision based on which one you want to use. What you can do is come up here to the two candles and just jump down to line. Once you're on the line chart, you can just play connect the dots, right? And that's your falling wedge. There's a nice liquidity grab here. There's not always liquidity grabs, but if there is one, it's usually a nice spring that follows, which is what we've seen play out here. So once it reclaims this lower one, after creating this pattern, it's looking pretty good. There's multiple ways to trade these, but we'll go through how we'll set this up on the questionnaire. So this is one of them that are available. I'll just show you one more that happened a little bit more recently. Sorry, less recent, but within the last few months. Is this big good boy here? Okay. So again, we're just going for confluence with this trend line, right? We're an artist, not an autist. We're just trying to get this to line up nicely, and we can see that it's been respected pretty well, roughly through there, right? And then again, we've got our counter bodies, nice and clean. What we've got here is 3 consecutive lows, right? They get lower and lower each time, and it's not a descending triangle, as both the candle body, right, went lower than that, or from the wick, went lower than that both times as well. So it's definitely a falling wedge. It's just a less of a slope on this one compared to that one, okay? Just keep in mind on this guy here as well, there is 3, 1, 2, and 3 lower lows there, right? 1, 2, 3. So they don't always have 3. Sometimes you might get a falling wedge that looks like this as well, which comes down like this. Price will come flying up, right? 1, 2, retest, higher low, and then continue on, right? That's more of a bull flag type play. That's usually the continuation pattern you'll see on smaller time frames, the 1 hour, 30 minute, 15.5, right? Very similar to what this looks like here, but this one here in particular is not a falling wedge, just more of a flag. But some of them will do this, but it won't have that second drop. It'll just have, sorry, it won't have the 3 there. It'll just have 2 in total before it continues on. So a little bit to this one. It's not as straightforward as an ascending triangle, and that's exactly why we started with the ascending triangle, because it is not too hard to find. So we'll just draw this guy in and we'll get started, right? So jump to the form. So we're on the falling wedge. You'll fill in the first part that you did on the ascending triangle. That's the first part of this, and then once you've gone next, you'll come to this page here, right? So before price broke out, what was the last signal from profit in the buy or sell part? Okay, so we'll go through profit on the chart. Let it load for a sec. We want to click buy and sell signals. You want to show this. That means you want to show them. However, with the latest edition last night, the Hazer, the update we pushed, you've actually got to come through here and choose which ones you want. So I'm going to go through here and choose all of them. All right, I want them all on my chart, and I want to see what's going on. So profit has said to buy after that candle. So it would have appeared, but it wouldn't have been locked in. So this was the buy candle, right? So while we're still in the formation of this, in a sense, if I have to teach you guys to trade, when we reclaimed this horizontal level put in by the second low of these candle bodies, once we reclaimed that and we had that buy signal, that was a pretty like get in the market point here, alright, especially after there'd be bullish divergence on the RSI and stuff like that, which we'll get to shortly. So there was one, and this is actually, by the looks of that, potentially, well, looks like the small and the mediums are now the same size. So that's a bit harder to do. I'm assuming with the update we pushed last night, because he's changed them from labels, or two labels, they're now the same size. So this changes this question slightly. We're going to have either a small, medium, or large. Small and medium are now the same, okay? So when you come to this form, just go by the smalls. If it's either a buy or a sell on the small, I'm going to delete the medium, and then we're going to have the large, okay? So there'll be no more mediums moving forward on this particular form, and maybe we'll fix that later, but I don't think that's an issue. We can leave it as is. So once we reclaim that level, that's the buy. So we're going to say here there was a small buy signal before price broke out, right? Continuation candles, were they relevant during the formation of the pattern? So we'll just go into the indicator. Once Spotify goes away, come on Spotify, we can go through this. Double click the icon. Continuation candles, all right. So they help form the bottom of the initial wave down, but in my opinion, they haven't really helped at all. The new addition that Hazer added last night, there's actually a new color candle after the continuation candles now, letting you know that it's telling you that price is probably reversing right here, which it somewhat did, right? So I'm going to say no to the continuation candles in this particular question. If they were down here and we got the teal pretty much here, or the aqua, on this breakout buy, that would have been perfection, right? Was it relevant on this one? No, it wasn't. Cool. Which is not a bad thing, right? That's what we're doing this data. We're trying to find out if they are or are not. Continuation candles. Were they relevant in keeping you in the trade after breaking out to reach T1, okay? So breakout is here. And target 1 is found by going from the furthest dip within the pattern, which is the entirety of wave 1. We'll go wick to wick. We'll go down to this one. From the point of break, right, or the point of retest. So that's our retest, or this is our retest. It's a bit of a muchness. You can go from the point of break then, alright, and come across to here. Alright, so continuation candles, they didn't really help us, right? They would have told us to get out after that candle, especially after the SFP and the color change here. So we wouldn't have reached target 1 with the continuation candles of any form of assistance, so they weren't relevant, right? How about in target 2? So target 2's found by if it's a setup like this, it's not always like this, but you can see here we've got this impulsive move up, and then we come down a wee bit, which is this period, and then we form our falling wedge, right? So this move from here to here is target 2. From the point of break here, up, okay? So again, the continuation candles haven't helped us get here. They weren't relevant during this. However, we did reach it. Okay. No, they weren't. Ichimoku, was there a bullish TK cross prior to breaking out? Alright, so just going to clean up our spastic drawings. Get rid of this mess on this chart. And we'll just go to an Ichimoku on. Where are we? This one. We got a TK cross now as well. A little arrow should appear on the chart, make your life a bit easier. Hazer, you're a genius. 1, 2, right. So within the pattern, there was no TK cross. Right, it happened here. Essentially, the cross happened here and was locked in on that candle. That's how this is displaying. So the cross happened on this candle, but it wasn't locked in until that candle, which is why, based on data, it tells you this is where a cross happened, but it actually happened one prior, just like over here as well. So that's why that happens. Cool. So back to our form here. Was there a bullish TK cross prior to breaking out? No, there was not. And this could be a common thing found in the falling wedge, right? Ichimoku, was price above the Kumo cloud prior to breaking out, okay? So prior to breaking out, we're well and truly under it, okay? And we can see it played resistance here as well, so nope, we were not above it. However, you might find that there are falling wedges that happen much sooner than this one in the downtrends, which doesn't allow Ichimoku to form a large bearish cloud like that one did. Next is a trend strategy signal. Was there one prior to breaking out? So this is actually based around Ichimoku, if you weren't aware, the trend strategy signal, and a few other things. It's going to be no signal, as we can see here. It's actually telling us to short here, right? Which could have been a nice scalp, but that hasn't helped at all. So there was no buy. Was there a trend? Okay, this is how many there were. So there's none. There were none. Did price action reclaim the 30 VWMA before breaking out, right? So if you guys aren't aware or you're new to this, again, the 30 VWMA is something that I use in a lot of my stuff for Confluence. You can see here, let's look at the power of this thing, right? It's absolutely great. But however, we didn't reclaim it until we actually had broken out and taken off. So again, this one here is not relevant either. So what we found was very strong with the ascending triangles is not that strong with the falling wedge. ATR, right? So if we were to take the buy signal, wait on, go ATR here. So we'll just put that on show. Get rid of the 30 VWMA. Maybe just throw that buy signal on. Cool, cool, cool. ATR 2, that's fine. Cool. Let's draw this in real quick. Cool. All right. Well, we got this show stop on. Okay, so because I haven't used the replay tool, that's why it's not showing up. So I need to go to all, right? And now it shows all of it. So how we dissect this is, this was our buy signal. So this is our entry, right? And it's telling us to put our stop loss here. And then we let the trade play true. So I'll take a long position from here. Our stop loss goes underneath this based on ATR 2.0. Remember, that's a lot wider. And then we'd be chasing target 1, which would be that distance right from here to here. From the point of breakout, which would be about there. So this comes up a bit higher, right? So it's actually a pretty weak R to R. However, that's because we're using a much greater ATR value. So go back to our question quickly. This is the 1, ATR 1.0. So we go into profit and we change this to 1, right? This is going to change our complete stop loss position. So we can actually move this up now to about there, which now increases our R to R. Alright, so based on this, as long as we put our stop here, entered on that candle here, and chase that as your target 1, that was a profitable trade, okay? So we never got stopped out by having the ATR set to 1. So that means yes to the 1, but it also means yes to the 1.5 and the 2, okay? Because the higher the value, the greater that distance is from your entry. So as long as 1 is covered, then 1.5 and 2 will be as well. If 1 wasn't covered, then you need to check 1.5 manually. If that wasn't covered, then you need to check 2 manually, alright? The Cradle Strategy, was the EMA ribbon relevant during the formation of this? So let's go into this and go down to, where are we hiding? There we go. The Cradle Strategy, turn that on. It's going to turn off the ATR and the buy signals. Cool. So it was resistance. If you shorted it, right, and then became support. Not relevant, not really relevant, not really relevant, support. So the question is, was the EMA ribbon relevant during the formation of the pattern? We're going to say yes, because that was resistance, right? Came back into it once, came back into it twice, free time, finally got above and flipped. So yes. Prophecia, relative strength index, the RSI, right? Prior to the breakout of the pattern, where was the RSI sitting? Okay, so we can get rid of profit. This can stay on the chart. we'll bring on Prophecia. Prophecia, we need to throw on RSI, RSI, and maybe we might as well take the bull and bear divs here as well while we're at it. Okay, so cool. That's our trade setup. We've got our bullish divergence here and blah blah blah. So the question is, during the pattern, no, sorry, the one above, prior to the breakout of the pattern, where was the RSI sitting? So the candle beforehand, this guy here, where was RSI? So RSI was actually down here at 47.88, which means that we were between 30 and 50. Right, so you got the different options here. 30 and 50 was where we were, which is interesting. I thought we'd be above 50, to be honest. RSI, during the pattern, was there any bullish divergence on the RSI? Right, so it depends on how many dips there are. Sometimes you may have a fourth dip, sometimes it may only be two, which is why you've got multiple options. So we've got one on the first dip, two on the second dip, and then two more on that third dip, right? So plenty of bullish divergence. We can go multiple dips here, or we can go, that'd be if it was just on the third dip or just on the second. But yes, it was multiple RSIs, bullish divergence on multiple dips. Alright, now we want MFI. So go into the MFI. Here we go. We can leave these on, and then we can turn that off and turn this one here on. Let's go ahead and delete this. Alright, so the candle before breakout, again, this one here was also between 30 and 50. It's underneath that 50 line, alright? So 30 and 50, and then the same question again about bullish divergence within the pattern. So we actually had one here, right? There's bullish divergence through here, and then there's also bullish divergence here, right? So there's multiple dips. Yes, multiple dips. And then again for the custom oscillator of ours, we need to go down here, untick MFI, retick that, untick that, retick that, come back into the chart. So the candle prior to breakout, it was actually sitting, you could say that'd be there, right? That'd be like 50 to 70. That's pushing it, but 50 to 70, is there a 70 to 80? There. Ooh. This one's a bit tricky. Let's work this out exactly. So we can use the horizontal line tool on that candle close. It'd be right there. I'm gonna say it's 70, so I'm gonna say 50 to 70 because it's coming from the low to the high and not the other way around. So 50 to 70 on that. That's the logic behind that choice. Divergence, was there any divergence during the formation of the pattern? Yes, there's on the first dip here, right? Then on the second dip here. So it's nice. We've got a hell of a lot of divergence across multiple indicators on this last dip, right? Is what we're seeing there. So yes, multiple dips. MACD, right? So we're just referring to divergence this time, and not the breakout where it was. Come into the indicator. We can turn off this now, and we can just turn on MACD here. Right? Was there any MACD divergence? Yes, there was on this last dip. Right? That's a little blue signal. You might need to just drag that up and down just in case it's hiding somewhere down there low, but it's the blue guy by default, I think. And this is on the third dip. So there was only once, and it was on the third dip. And then again, rinse repeat that for OBV, on balanced volume, which it stands for. To untick that, retick that. And do we get any divergence of OBV? I can't see any. No, this says no divergence on OBV here. Cool. And during the pattern, were there any golden peep or Pepe divergence? Right, so we need to quickly just go through and then test those out. Best way to do that is just tick this here, start on number 3, get rid of OBV, and we can have a sus. Alright, so on the initial dip, there was a golden Pepe, right, on the level 3 one. Right, so there was a level 3 one. Now let's just see if there's a level 4 or a level 5. Go back into the indicator. Where are we? Here we go. Choose level 4. Alright, none came in. And then level 5. Cool. Hey, so if you're watching this, what we could do is actually have an inverse actually of these two here. where the MACD comes before the OBV as another option maybe. So these three plus MACD or these three plus OBV, and then the fifth one, or sorry, that one will then still exist. So add another one to this, but have MACD instead of OBV, because we can see that there was a MACD divergence on this, but there wasn't an OBV, and we should adapt to the market, and the market is showing us that MACD was more relevant and a very, very critical pattern in the last few months. So we'll add that to our to-do list. Sweet. Moving on from that. Cool. So there was Golden Peep, only level 3, alright? But it did exist. And that was on the first initial dip, right? If there was more than one, blah blah blah, it's the same as the previous divergence questions, you just choose. So this one was just on the first initial dip for the level 3. Zone signal high, alright? So let's go and flick that on real quick. Get rid of our squiggles again. Here we go. Cool, all good. Alright. So we got a reversal setting up here, but we didn't get one down here. So let's go into the options real quick and I go read our question. With buy, sell signals ticked, right, and Golden Peak level 3 selected. So let's go and make sure we got both of those done. Buy and sell signals here. And we've got level 3 and Peep. Cool. Did the zone signal pick the bottom or very close to it of the initial dip? Right. Sorry. Well, this is of the initial dip is actually from the ascending triangle question, so please ignore that. Alright, so we're just going for that part here. So, by the looks of this, there hasn't been a zone signal. A buy, we're looking for a buy, a green one, by default. So we'll come into here and change this around a wee bit. Alright. So we want the zone accuracy to be medium now. And see if there's a buy. So there's a buy here on the first initial, but it's not relevant. It's not relevant to the break. It's not relevant to the pattern. Alright. So we'll come back up, go here. Cool. Was not relevant. I might just quickly check different lookbacks. See if anything changes with these lookbacks. No, no love. Cool. So no, it was not. Which zone signal was more relevant? Not applicable, right? So if there was a medium one there, yes, and a high one, no, or both there, but the medium one was better, then you choose the medium one here, or not applicable if neither of them were relevant. All right. So that's Prophets here done. We'll get rid of that off the chart, and then we'll now bring up Oracle. Sweet. Higher accuracy order block, current time frame, prior to breaking out. Was there an order block acting as support? Alright, so let's go and throw order blocks on for current time frame. Alright. Cool. So prior to breaking out, there was no support, right? Where actually this was a resistance, but it did come as support after breakout, right? So this was resistance as we came up and slapped to it here. But if we go into this, here, was there, prior to breaking out, was there one acting as support? No, there was not. Right. Again, while we're on the higher accuracy, on the current time frame, prior to breaking out, was there an order block acting as a resistance? So what that's referring to really is, was a level down here, where we were, before we broke up and broke out, was there any resistance in this range from an order block? No, there's not. Right. We could probably say this was support, to be honest. Zooming out a wee bit. So we go back to this top question. I'm going to say yes to this because if we zoom out, which I should have done, really rookie of me by not doing that. This guy here, this candle, that's our order block, which have picked it up very nicely, has been the level of the re-entry. We actually longed on that. So, perfect, alright? So that's actually a yes. Make sure you zoom out or look left. Rookie 101. Higher accuracy order block, current time frame. Prior to breaking out, was there an order block acting as resistance? So in this case here, no. This would have been the resistance, but it wasn't prior to breaking out. So no, the answer there is no. lower accuracy. So rinse, repeat the same questions, but on lower accuracy. So go into it, and we're going to change the accuracy down to lower, and go OK, and delete my one I drew in. This is just painted everything to be one now. That's not relevant. It's a bit of a mess, to be honest. So that lower one, which is why it's called lower, is not relevant on this particular falling wedge. We're going to say no to that, and we're going to say no to that because the entire thing was just colored in, really. With a lower and higher accuracy, order blocks more relevant. So we're going to say higher. Higher accuracy order block, multi-time frame, right? One time frame above your current, right? Prior to breaking out, was there an order block acting as major support or resistance of one time frame above? So we'll go back into the indicator, we've got our current time frame. We're actually going to flip to multi-time frame, get rid of current time frame, and then choose one time frame above our current one. So we're actually on the 4-hour chart right now. So we'll just jump up to the 5-hour, and then go OK. All right, let it load. The 5 hours, perfect. Wow. Look at this. This is actually great. I've never actually ever looked at the 5-hour time frame before. Support perfectly off a 5-hour. It's grabbed from back here. It's also grabbed one from here. It's perfect. Wow. 5-hour, hey? Might need to check this time frame out. Curious. Cool. So, yes, we're gonna say yes. That was support, all right? We could be support and resistance even. No, there's resistance here. Got above finally. Launched out. Resistance here. Yeah. Both. Yeah. One time frame above. Yeah. 2 time frame above. So back into our indicator here. Go 6 hours this time. Let's see what happens. Yeah, not relevant really. We could say this little guy, because that actually goes all the way technically. We can say it was like support, and then resistance where it finally broke. Yeah, that was relevant. I think that's just resistance though. That support is a bit of a meme. Okay, cool. So moving on from the order blocks, moving on to the power candle. So just remove, untick that. Come all the way down and find power candle, which is here. The aqua by default, one did form within it, but Jesus, it was a biggie. Did it play a key role in the pattern formation? The power candle play. Okay, so my question is, can I actually include that one here as well? I'm gonna say yes. I'll explain my logic. So that is a level, right? So that's pretty clean. As clean here, but it's also exactly where we were flagging underneath before we finally broke out of both resistance and the order block level and the P candle through here, right? And we also had another P candle through here, kind of body lines up with this one. So that's relevant. That is relevant. Yes. We can say that's what, support and resistance. Support, resist. Yeah, that's both. Yes, support and resistance. Cool. If the impulse move was down prior to the formation of the pattern, was there a bearish power candle? So the answer to that is yes. So the impulse move is actually down for this one before it broke, even though there's a large impulse prior. So this is our pattern from here to here, here to here, back to here, down to here. Right, that's our touches. That is the impulse move down. Right. So yes, there was a impulse move down, and yes, there was a red bearish P candle. So the red doesn't necessarily mean it's bearish and it's going to go further. It just means it's come from a impulse move down when you see a red one, and inverse for the green one. So yes, there was. If the impulse move was up prior to the formation of the pattern, was there a bullish power candle? Right. So let's say, for instance, in an ideal world, this came up here and then did our falling wedge. So it got tighter and tighter, right? But there was a P candle, say here, within the wedge in this first dip. So like this one here, because we've got this no man's land here, right? That's not quite relevant. This P candle isn't relevant to this formation. However, if it formed very cleanly like this, which does happen, then it would be relevant. So in this case here, not relevant. No. Trading view tools, okay. So back to Fibonacci's. Let's just turn this off, clean our chart up a wee bit. Let's get rid of all these brushes down to here. Cool. I can get rid of this target 1. Okay, cool. Measuring the impulsive move prior to the pattern forming, where did it lose support to start forming the falling wedge? Alright. Measuring the impulsive move prior to the pattern forming. So that's going to be this impulsive move down. So in this case here, it's an impulsive move down here. Alright, so... Wait, no, I've done this wrong. I've completely confused myself, so sorry if I've confused you now. Measuring the impulsive move prior to the pattern forming. Alright. So this is actually part of the pattern. So the one prior, we actually want to go for this large impulse to the upside. In my opinion, the impulse move started here, and that's because that is a very impulsive move, right? And then it's continuation from that point onwards. So we'll go from here. Cool. So where did it lose support? I couldn't hold. Wait, I've drawn that incorrectly. Wow. Here we go. So we lost the 2.25 or the 0.236. Very similar, very close. And then just choose whichever one it is that I have on the form for that one, which would be this one here, right? So measuring the impulse move to the upside, once we finally lost the 236, and we came down to the golden ratio, reclaimed that and took off. That's pretty much all that happened, right? Measuring wave 1, right, which this is wave 1 of our pattern from this wick top to this wick bottom, that's an entire wave, right? So we're using the Fibonacci retracement tool. Measuring wave 1, where did price reject before falling to new lows to create the falling wedge? So what that means is if we were to measure to here, using to this the bottom of that P candle, just lining that up, where did price rally back to before rejecting to then go to the new lows? So it's the 618, right? We'll choose 618 here. Fibonacci retracement targets, measuring from the start of wave 1 to the lowest low, right, the lowest point of the falling wedge, where did price retrace to after breaking out of the falling wedge? Right. So what I mean by that is this. We go and remove that off the chart. You start at the very start of wave 1 down to the lowest low. Alright, so that's our falling wedge. We've identified that already. And the lowest point of this falling wedge is right here at that very tippy top bottom. Right, so after we broke out, which is here, where did price come back to before taking off? So in this case, it's the 382, right? Because we came back to it once, twice, 3 times. We never actually touched the 236. So technically, if we were to program this into a bot or automate this, which is what we plan on doing with all this kind of data to make life easier for you guys and for us, is make this just, yeah. So 382. That's why this kind of information is like, even though I got close, it didn't touch it, so we programmed that, right? So the 382. Next, Fibonacci retracement targets. Measuring from the beginning of wave 1 to the lowest point of the falling wedge, so exactly what we've just done, we can reuse that one. After breaking out, where did price reach? Okay, so price broke out here of our wave 1 to the lowest point, and where did price finally reach? So let's drag that across to there. So this is still a work in progress, right? This hasn't actually completed its full cycle before it rolled over and actually started trading below the falling wedge again. So in this case here, we've only reached the 1.414. Very close to the 1.618, but we didn't get it, right? And technicalities matter, so 1.414. Alright. Measured move targets. So there's 3 measured move targets in a sense. Target 2 doesn't always exist, or target 2 does exist, but we just refer to it as target 2, but really it was a target 3, if that makes sense. I'll explain now. So get rid of these, and we'll just draw our chart back in. Right, here's our pattern. target 1. The furthest point within the falling wedge, it's usually wave 1 like that, right? Unless wave 2 is even deeper. Wave 1, from the point of breakout here, actually we'll just clean this up because that matters. We'll go wick to wick or body to body. Whatever you do, just make sure you're consistent in what you do. So we're going to go from body to body on this one. Right, and this is our target here. Which is probably why like this consolidation period happened here. Cool. So target 1 hit. Alright, that's how you find target 1. Target 2 is actually the impulse move including wave 1. Alright, so in this case it'd be this from the point of breakout. So we'll just draw that back in. Go candle body. And take this down. It's pretty much the start of that candle here. So that there would be your target 2. The furthest wave down. Right? The bearish impulse. You don't always have that bearish impulse, which I was referring to over here. So the bearish impulse, you don't always have that. Sometimes it's a very clean formation, but the target 3 should apply, which would go from back here, right? Because this is still forming, we don't have this data available to be able to answer this one. But from here, you're from the point of break, right? And that's your impulse move to the upside here. So it'd be like 67 through there, right? That'd be your target 3. So 1, 2, and 3. Pretty straightforward. Which target was achieved? So for us, bearish impulse was achieved. Did the first golden extension fib target also line up with either of the measured moves? So what that means is, if we go the Fibonacci from wave 1 down to the lowest low of the falling wedge and line that up, did it line up with a fib? Well, perfectly, alright? So we had both a measured move and the fib on top of each other there. So I'll update this question maybe actually to go with, I'll leave it. I'm going to say no to this. Even though it was a perfect fib level, it wasn't a golden level, and that's what I'm curious about. So we'll leave that. But that's a good learning curve for yourself, guys. If you see fib targets and measured move targets lining up to pretty much the same value, it's probably a good idea to take some profit there. Did the second golden extension fib also line up with either of the measured move targets, which means up here, right? This is this guy. This is the first one. Here's the second one, right? So the second one, that's a no as well. Trend line was diagonal resistance clean, right? So that's this guy here. Pretty straightforward, right? This one's pretty clean. And if we were to use, say, this one, I'd say that'd be pretty clean too, somewhat, right? So if you went inside there, you got attempt to break out, rejection, bounced. It's a very clean. In my opinion, that's very clean. Even though it's a little bit dirty, it's very clean. Yes. Was support clean? So we'll go back to this one. Oh. Draw that in. Go from candle bodies if you want. Just whatever you do, be consistent. You're going for confluence above anything really. So if you got bodies like this one, that's a body through here, but a wick through here, and then wicks down here. That's confluence, and I'd appreciate confluence over getting too OCD about it. Alright, so either way, it was, in my opinion, they're clean enough. It's not some really weird wonky crap where it's like, maybe like this, and then there's your falling wedge where it's like a bit all over the place. So if it's clean, good. Pretty much what this does is help me work out if it needs to be audited with a bit more in depth, if that makes sense. Just it's a fast track into auditing. Was diagonal support clean? We're going to say yes. Was the breakout clean? What was extremely clean on this one? Right. And then Elon Musk was the other one. So either breakout there or use the counter bodies. Right, breakout. Either way, very clean. Breakout clean. Yep. So next is the retest. I've altered this slightly and added a not technically but yes and a not sure. So it's a bit of a fucky one, but I'll explain why. So our pattern is right here. Right, but there's no real retest, okay? There's no retest through here. But we did come back down like in a downwards retest fashion. Never lost a key level, which would have been this order block through here put in. Right, never actually lost that level from that order block. So because of that, I'm going to say yes to the retest, but not technically. Alright, this is this guy here. Because we never actually retested this trend line. That would be a clean retest. This is a horizontal retest. This is a rejection of a head and shoulder through here. But it didn't actually ever come back and test this trend line. So because of that, yes but no. Alright. And then we just submit our trading view screenshot through here. Alright, copy that. Paste that here. Time finishing. So now 5:50. So this one took me a while to help. Create this tutorial. 50 minutes. It'll get much quicker on these patterns. I saw a couple of guys, what they'd do was actually go and find a bunch of falling wedges first, and then go through and smash out the thing. So instead of like trying to find it and then fill out the form, they actually went and found a bunch of them and then filled the form out. When you submit the form, please make sure it's only one pattern on the screen, and make sure you've drawn it in. Just really simply like this, just so I can see the timestamp, because when you screenshot it will timestamp and show the dates on the bottom, and that kind of information, which I can then audit. Sweet, and then just submit that, and then away you go. Alright, so I'll wrap it up there. Cheers guys, I hope you learned heaps from the ascending triangle one, and I hope this one helps you learn a lot as well. Sweet as.